Hello, trading is here, and today I want to break down one of my trades of IUD CAD daily time frame, which I took about 21st of April. And there are two trades which I'm going to present to you. The first trade is a 28.4 trade, and the second trade is 54.07 trade. This trade was taken using the supply and demand trading concept, and now I'm going to tell you the reasons behind that trades and how you can take some trades like this too. In the beginning, we need a theory and we need some reasons, multiple reasons before taking a trade. And here are my reasons and a story behind this trade on IDK. The first thing and the most important thing which I care about in trading is the market structure. Market structure is so important to me, so in the beginning I want to tell you what happened in the structure of this chart. You can see that in the beginning, from here in this trend, we had a high, and there is the first high. All right, so this is the high right here, not this one, right here, and we have a low right here. We have a high low here, and another high low, another high, another high low, another high, but this time market broke below this major low and made a lower low in the market. So here is the first change in the market structure. As you can see, we had multiple high lows in the market, but at this point price broke below this major low and created a low low, and that is a confirmation for short entries in this chart. So this is the first reason, and we call this reason a breakup structure, or BOS. All right, so the first reason is this one, which is market structure. I'm going to kill in this chart a little to talk about other reasons. All right, so this level right here is a high in the market. All right, this specific high in the market was broken right here to the upside to create another high, which is a higher high, but price couldn't stay still above this level in the market, and after reaching this level it dropped below the previous low. So it makes this level a FTC level. What is a FTC level? A FTC level is a failed to continuation level. So at this level, price broke above this level to continue the bullish trend, but not only it didn't continue the bullish trend, but it broke below the previous low and started a bearish trend. So what we can see exactly is this: 1, 2, 3, and 4. All right, so this is the breakup structure, and this level is a failed to continuation level. So what can we do with this failed to continuation level? Right here we can delete one of our supply zones in the market, and we can kind of limit our choices of trading supply zones. All right, if you look at this trend, this bearish move to the downside, you can see that we have multiple supply zones here. One of them is here, the other one is here, the other one is here, and these two are resistance zones. So we have 1, 2, and 1 is here actually. This candlestick is a supply zone 2. So you may say, why we didn't take the trade here or here? Why we didn't wait until the price reached this level? Because this level has already done its duty. And what is its duty? The duty of this level is just pulling back to this previous high, and that's enough. So the supply zone is just a pullback and it has no more value for us. All right, so if we want to mark up this part of the chart, we can see that we have a breakout here. All right, and we have a pullback to that breakout, and this move here is done, and we are not going to use it in the future. So the next choice and option is this one right here. So you can see the supply zone obviously here, and the supply zone is kind of easy to see and easy to catch, but to maximize our risk to reward ratio, we have to go to lower time frames and find better entries. To do that, I am going to go to 2 lower time frames, which is hourly for me. And all right, here is the hourly time frame, and you can see that that's specific supply zone is like this in an hourly time frame. All right, what can you see right here? You have 1, 2, 3, 4, 5 seconds to answer, and let me tell you, the answer is a head and shoulder. All right, this is a head, this is the right shoulder right here, and this is the left shoulder. All right, so this is one point of view to this move in the market, and head and shoulders from classic price action. All right, what would be the other point of view about this move in the market? The other point of view about this move in the market is this. Wyckoff. Yeah, Wyckoff. And it is a distribution phase. So how can we name it and how can we mark it up is like this. This is the first point of supply in the market. All right, after that we have a buying climax. All right, so this is the buying climax. The next move to the downside is automatic rally, this move. The next move is a UT. All right, and the next move is the last point of supply. All right, so what do we have here? We have a point of supply right here and another point of supply right here. So our desired levels are these two levels. And you know, sometimes we can use the UT or the buying climax as our entries too, but what I've been looking in this specific situation was the last point of supply and the point of supply to take the trade. All right, so the last point of supply is where the last tries to keep the trend bullish comes in the market, but buyers fail to keep these trend bullish, and after that price drops so strongly to the downside and starts a new bearish trend. And so obviously, and as you can find out from its name, there is a point of supply inside this move. All right, and that point of supply led to this monster move in the market. All right, so we try to find the exact last point of supply in this chart. Where would be the exact last point of supply? Right here. if you ask me, I would easily tell you that that level is somewhere like here. Why? Because this is where the momentum came into the market, and this is where we had one of the strongest and the biggest bearish candles after that. And before that we had some bullish candles, but after this we had some consecutive bearish candles, which is the sign of a strong supply in the chart. So I call this the last point of supply, like this. So this is my desired level. If you're not able to find this last point of supply like this, you can use the whole area as your entry area and as your point of interest. All right, so we try to expand these levels to see what happened in the future. So this is the first level I used to take the trade, and this is the second level. Right? So as you can see, we could have used both of these levels as our entry levels, and as you can see, that last candle of supply in the market is the more accurate, could provide you a more accurate trade in this chart. All right, so this is how I decided to take this zone as my entry zone and as my point of interest. So when I go to the future and when price gets closer to my entry level, you can see that there is another distribution phase and there is another change in market structure too. And what is that? That is, and where is that? That is here, right here. Okay, we have a high, and these highs which I'm telling you is in low time frames. For example, it could be a good high in 5-minute time frame, and this one could be a good low in 5-minute time frame too. So what we have here is a high, a high low, another high, another high low. But at this point, market and price broke below this major low in the market and created a low, which is here. So we have this level, which we call it break of structure, and after that price tapped into our area of interest and dropped so heavily. Why it dropped so heavily and why it dropped some about 93 pips in only an hour? The reason is where we took that trade is a strong point of supply, and we can understand that from the reactions. All right, you can see the same reaction here, not as strong as that, but that is strong too. So we can expect to see the same reaction in the future. All right, what happened after that? After that, we can see, if you go to higher time frame, we can see after that we had another break of structure, which told me that you can stay in your trade right here. And from here we can use the market structure too. We have a low high right here, we have a low right here, another low high, another low, and another low high, and another low, another low, low high, and another low, low. This is where I decided to close my trades, and the reason is I do usually close my trades when it's approaching to one of the one of the major lows in the market, not this low here, but the low after that, not at the peak level, not here, but a little bit above that. Why? Because most of the traders take the profits sooner and before price reaches this level. So we could expect price to don't reach this level at all. This is the full breakdown of this trade, and I hope you liked this breakdown. Share this video if you liked the breakdown and the explanation. Liked it if you want me to post more like this, and I would be happy if you subscribe my channel. Don't